Hello everyone and welcome to a new episode of Careers Talks. Today I have a friend of mine, Fatih. Fatih studied economics with a focus on finance at NYU Abu Dhabi. He started his career as a fresh graduate in the investment banking industry at HSBC, and then Fatih decided to shift to the private equity and project financing industry. How are you doing?
I'm great. Thanks
How's
for having me,
the weekend
Tanner.
so far?
Good.
It's good?
Yeah, looking
Nice.
forward to this.
Same. Fatih, I usually start my episodes with this question, which is, why did you decide to study economics and focus on finance? What factors, let's say, affected that decision when you were back home in Peru studying in school?
So I think about this from time to time.
Mm-hmm.
Why economics? Why this path? And I think when I was a kid in school, I liked a variety of subjects, but with a focus on numbers.
Okay.
And I like the mix between maths and a lot of logical reasoning to be able to understand processes. I like to understand processes. I like to understand systems. And when I started thinking about a career, I had two options basically. First was industrial engineering, because it's all about processes, optimizing systems, which I really like. Picturing diagrams, how things flow in a logical way. And the second one was economics. A bit less like
Of the
specific,
systems, yeah.
but much broader in context. And in my opinion, at least back then, a bit more applicable to more things. And because I wasn't really sure what career I wanted to do at all, and uni wasn't going to be an exploration phase for me, I opted for economics so I could keep my options, let's say, a little bit more open.
Makes sense.
Yeah.
And you started doing some internship experiences at uni. How did you decide, I want to focus on the finance industry, I want to focus on the banking industry in specific, because you also did an investment banking internship in your junior year, correct?
Yes.
So how did that knowledge or decision-making process start, or how did it happen?
Right. So in my sophomore year, I did my semester away in London. I came here and I immediately thought this is a great city. So I started looking at internships in London for the summer. And, I've heard about finance and banking. I didn't know much at that point. And I found like a few internships that were for second year students. Usually it's your junior year where it's a strong internship. And one of them was commercial banking in HSBC, retail and commercial banking in HSBC. Okay, let's give it a try. So I applied there and I got the offer. And it was a mix of retail banking, which is essentially you work at the branch where people go and,
Nice.
they take out money and do their
With
personal
those
banking things.
Yeah.
And commercial banking, it's pretty much the same, but with smaller companies.
Yeah.
Loans here to like a car dealership and whatnot. So I did the internship. It wasn't for me, any of those, neither retail nor commercial. But when I was doing the internship, I was hearing a lot about investment banking.
Nice.
So I started, studying and learning what this is all about.
Yeah.
So when they called me to offer me a return internship for my junior year, I told them, thank you, but I want to go to the investment banking division. And they were like, that's great, but you have to apply again. We can't do anything about it. So I said, okay, perfect. And give me a recommendation or something. Just trying to leverage
definitely.
whatever I had.
The connections, yeah.
So I think that helped a lot, because when I put in my application, I had a referral from my manager from my previous internship. And then went through the whole process and landed the summer internship in investment banking.
Nice.
It is a very competitive market,
Yeah.
and it's getting more and more competitive.
True.
So you are not only competing with students in the UK, but you're competing with students from top finance unis in Italy, like Bocconi.
Yeah.
You're competing with students from France, from HSC, INSEAD. Like, there is a lot of competition.
Yeah.
So I think for international students, you have to find little ways to distinguish yourself. Two things. Little ways to distinguish your profile from the very standard finance profile.
Candidate, yeah.
Because they receive a lot of those.
True.
And the second thing is understand the application process well. Because many companies now are using different interview techniques, like video recordings of yourself to answer one question and stuff. And I don't know if people know about this, but these companies, it's not one person filtering through the videos. It's an algorithm sometimes. You know, and it picks little things like the background here, if your facial expressions, if you're stressed, if you're reading, you know? So if you understand the process well and prepare yourself for that process, for each specific place that you're applying to, you're maximizing your chances of getting through the initial stages. And once you are finally in contact with a person, then it's up to you.
100%. We're gonna touch on this bit of trying to give yourself or trying to find that niche, your niche selling point. So I'll touch a bit on this. So now you work in private equity. How is that different from investment banking? Why did you make that choice? Like, walk me a bit through these two different industries, let's say.
Okay, I'll tell you about banking first.
And then let's start with the definitions, and then that would be good.
What an investment bank does essentially is to advise companies, big companies, on their capital needs. By capital needs, I mean you have M&A, which is mergers and acquisitions, when a company wants to buy another company, for example. You have debt. When you want to raise debt, you go to an investment bank to help you raise debt in the debt markets. When you want to raise equity, same. A company wants to do like an IPO, a public offering, or even just raise more equity in the public markets, you go to a bank for help. So it is essentially the one-stop shop for large companies to go for all their capital needs. As an investment banker, it depends on which team you join. But let's keep it to these three things: equity capital markets, debt capital markets, and mergers and acquisitions. For now, I did M&A. I did mergers and acquisitions. So we essentially, if a company wants to sell, or if a company wants to buy, we act as advisors. It doesn't matter which way it's going. We just advise on the whole transaction, because these are large transactions. They're complex from financial modeling perspective, from a strategic perspective, and also from just a process perspective.
Yeah, definitely.
So that's what a bank does, an investment bank. Then private equity, I think there's a scope within private equity that's very helpful to break down. So private equity is, as its name says, private equity. It's the private markets. So it's nothing you're gonna see in the stock exchange or anything. It's all private. So you have, in the very, very early stages of the spectrum, early stage venture capital, which is private capital to just very early startups. Then as the startup grows, you reach a phase where you can call it late stage VC or growth equity, when at this point, startups are raising finance to be able to explode in growth. That is like the turning point in a company to just like exponentially grow. So you have that. And then once the company transitions into a more, let's say, profitable, it becomes profitable, it's fully operational, stuff at later stage, then you can start calling it private equity. As it is. But in technically, private equity covers all this spectrum. So
and so it seems like the first role was kind of an advisory role, and the other one, once you invest, there's more of a hands-on approach when it comes to like thinking, okay, we have our capital in these private companies, how can we generate growth, let's say. So how did that different mentality of thinking in these two different jobs affect your growth, work-life balance? Like how did it contribute to your growth as a professional differently, let's say?
Yeah, it's a good question, because at the bank you are the bank is maximizing transactions. You want to do as many deals as possible because you're earning commission, you're earning fees on the transactions. So the more you do them, the more fees you're gonna get for the bank. So it's a very short-term mentality.
Yeah, you don't benefit from what happens after, like the growth of that, or not really.
Indirectly, if the company that you advise, let's say, does well, they can maybe hire you for another.
Again, exactly. But it's purely transactional.
It's purely
fees.
transactional.
Makes sense.
Yeah, absolutely. So that obviously defines the way you're working. In bank, as a junior, let's say an analyst, you are a resource that honestly is there to do stuff good as fast as possible.
Keep that transactional environment going as much as possible.
Yeah. So it is very high intensity. People are always going to tell you this is extremely urgent. And then you're on 5 different projects
that are all extremely
urgent. So that's very characteristic of banking. And I think that if you're considering going into banking as an analyst, that's one of the things you need to focus on from day one. How am I going to manage my workload? And how do I want people in my team to see me? Am I the person that they give all the urgent work, all the bad projects and stuff? Or can I establish myself in the team in a way that I have a little bit of leverage in choosing which projects I use, and people value me more for the quality of my work a little bit more.
More focus on that advisory part rather than do the pitch or like the things that are
the admin, like the admin work that's like very tedious, like, and someone has to do it, right?
Yeah.
So that I think that side of the job that maybe not many people speak of, it's super important. Forget about the technicals or whatnot. The person, how you compose yourself in your team.
Yeah, business acumen plus how you advise. And then how was that different? Like, how was that transactional environment? How is it different in private equity? I'm assuming the transactions are longer term, right? Because you invest in a private company, there's some time needed to generate that growth. So how does that, when a candidate moves to such an industry, how does that change their learning experience, and what different skills or different type of deals are you exposed to when it comes to moving to private equity?
Yeah, it's a completely different mindset. As you pointed out, this growth is long term. So as an investor, obviously you develop an ability. You have to develop an ability to understand companies really well, understand trends in a sector really well, and also understand finance very well. So you're looking at an opportunity that you are going to invest today to hopefully exit. By exit, I mean maybe even you buy a company, you sell it.
Or you sell your shares.
Shares and stuff in 5 to 10 years. So what do I need to do in that time span to be able to maximize my value and get out and then repeat with another company, you know? So it's really cool because you do get into the very details of how companies work, how sectors work, what are the trends, what people are giving value to and whatnot. In the bank, you don't, because you are maximizing processes, transactions, and you don't have time, and it's not in your benefit to dive deep into how a company works or become like a master in like trends and sectors and stuff.
It seems in both industry there's a focus on valuation of companies, but what are the transferable skills that you got from HSBC and now you're using at ECTA, or like what are you doing like now basically?
Yeah, so at the bank, you're right. So the point of being able to assess any sort of transaction is you need to understand how much is it worth.
Exactly. Yeah.
So valuation as a practice is fundamental to your job in the bank and also in private equity. I'm going to touch on the nuance in private equity because it does vary based on the spectrum as well. But in bank, you're dealing with huge companies, large companies. They're all public, etc., etc. So by default, you can value really in detail a company because you have a lot of information.
Most of it is public. Like you have the key data points that you can use to just plug in the model, get the value of that.
Yeah, and I mean, you have massive annual reports that companies publish, and you have all their financial information. So, but understanding and learning, like I would advise people that want to go into banking, honestly, pick up the technical skills.
Know that
When you join the team, first choose which team you want to join. Remember again, equity capital markets, the capital markets, or M&A. Within M&A, there's different sectors. Then that's up to preference. But within your team, check and understand which persons. I'd say associates. Associates are the ones that are doing the heavy work. Yeah. Check which associates are like the best in technicals. So you can learn from them. So you learn valuation. And then if you want to move to private equity, valuation is fundamental from growth equity onwards.
Okay.
Fundamental.
Yeah, so that early stage you skip it because probably there's not much data you can assess to know the value, but from growth up until almost pre-IPO
or even after, yes. Yeah. So, and the reason is obviously the techniques that you use to value companies, they're different, but valuation as a practice is fundamental from growth to later stage.
Okay.
Early stage, not really, because as you said, there's not many numbers.
Yeah.
Companies are not profitable yet. And it's more about things like market fit.
Team.
It's about the founder. It's about, any unique competitive advantage that the business has. So it's more about the business and the people that are running the business.
Makes sense. And that modeling part, I'm assuming in private equity, you go much more into detail. And you might be even doing calculations to assess the future growth as compared to doing that valuation part in investment banking, no?
No, not really. And the reason is because a private equity fund can be and usually are an investment bank's clients.
Okay.
Because an investment bank would, that's the perfect transaction for the bank, is where when a fund wants to sell or buy one of a company.
Okay.
Right? So the modeling is the same at that point because
both do almost the same. It's like double checking.
Exactly. Yeah. The bank does, but obviously the fund is supposed to be the specialist. Right? So the fund will always do their own models as well.
Because if the bank comes and misses a point or something, it's a loss for the private equity, for example, if you value that deal at a lower price.
Yeah, and the fund, let's say an infrastructure fund. An infrastructure fund just focuses on infrastructure projects. So things like airports, roads, even like energy plants and whatnot. That's their specialty. So they can go into huge amount of details when modeling something to get like very precise numbers. The bank is also going to help them if it's their client, but the modeling, as you say, it's very, very, very technical, very advanced at the fund because they're specialists.
Yeah, I get you.